EMs have had a pretty hard year. The Mexican peso usually is that proxy when it comes to whether you take more risk in EM. Do you think that we're not really out the woods yet?
Oh, look, I think in terms of EM, I think we need to be cautious on select currencies. So Africa's got its issues, so is Turkey, of course, and Argentina and elsewhere. But I think overall, EM is in quite a good position, EM currencies, particularly in Asia. Most of the EM FX in Asia have got current account surpluses, so that's a big tick for their currencies. They haven't seen too much of the negative blowback effects just yet of this US-China trade frictions. So I think that's a tick as well. And of course, their economies are growing quite well without showing too much inflation. So I think overall, EM Asia are in quite a good position. And I do not think we're going to see a repeat of 97, 98. Because their currencies are generally freely floating, or certainly not fixed like they were 20 years ago.
All right. Joseph, let's go from North America across the Pacific and to China now. And I want to get your thoughts on where the RMB should be going or could be going. Right now, the offshore is at 6.8, getting just a little bit further away from the 7 mark. And I understand that you're bullish USD against the RMB.
Yeah, that's right. I mean, our main reasons for bullish on dollar against the renminbi are twofold. So first of all, you've got the US-China interest rate spread that's going to go in favour of the US dollar. But the second one, which I don't think is getting enough airplay, is that China's current account surplus has collapsed. So 10 or so years ago, China's current account surplus was about 10% of GDP. Now it's close to zero. In fact, in Q1, it was negative. And that, I think, is a very big game changer for the RMB. What it means is that that China is at least partly dependent on foreigners to finance domestic investment. That means it's up to the Chinese authorities to have a very attractive investment environment to attract foreign inflows. It also means that it's more likely that the fragilities in China's banking system will be revealed because of this need to attract foreign money. So look, I see that the RMB is going to keep weakening in trend terms this year and next. I think 7 against the dollar is certainly possible by the end of the year. The forecast is 6.95. End of next year, I think something in the order of 7.2, 7.3. is very, very doable.
So, Joe, this counter-cyclical factor that was reintroduced by the PBOC on Friday, you don't think that's going to ease at least some of the pressure on further renminbi weakness, or do you think that this is just this kind of intervention doesn't exactly work in the long run?
Ultimately, the market is going to determine the level of RMB. These counter-cyclical measures are certainly important in the near term. So you've seen, reasonable rally in the last week or so since Friday's announcement. But ultimately, the fundamentals are going against the RMB in a way that we haven't seen in a very, very long time. So at best, I think the counter-cyclical measures will slow the pace of depreciation of the RMB rather than cause a sustained appreciation of the RMB. Because don't forget, capital markets in China are fairly open, and that means really that the market will decide the value of the currency.